Live. I hope everyone can hear me and see me okay. I really appreciate everybody tuning in to watch Talk with Angelo Christian Live. Every Thursday, 7 p.m. Central, we do a Talk with Angelo Live. We've been doing this from the beginning of 2021, and it's been a huge success, a great hit to come out to America, to educate people, to empower them, teach them about lending, teach them about finance. That's why we're here. We've been actively lending in America, doing commercial and residential loans nationwide for almost 20 years, helping hundreds of thousands of people. And we have phenomenal reviews on Google, as you can see. And you actually work with me. What you see is what you get. I'm the real deal. Angelo Christian here, your lender, your lending hub, your go-to to help you to solve all of your lending problems, whether it's construction loans, FHA loans, conventional loans, jumbo loans, HELOCs, hard money, portfolio loans, private loans. We have all different types of financing for you to help you, and that's really why we're here. And how we're different is we offer the largest buffet of loan programs out there. 100% financing, zero down home buyer loans. We're going to be talking about a lot of new stuff that's getting ready to change for 2022. It looks very exciting, very encouraging if you're going to be looking to get funding this year for some of the stuff that's coming out this year. So we're very happy and pleased to be able to offer a lot of these programs that are coming out. So I really appreciate all of you guys tuning in, watching the show, watching the channel. That's why we're here, to educate you and to empower you. Thank you guys so much for watching the show, watching the channel. And it means so much to us that you support our channel because we work very hard. Thank you. Yes, I was out of town last week at a business convention. I couldn't do Talk with Angelo last Thursday. I apologize. I don't like to miss doing the weekly shows. Just had to take care of something last week. But I'm back here now. And plan to be back here probably for the rest of this year, barring any holidays. I am big about, spending time with family and doing things with family because, life is so short and so precious. So I try to balance my family life with work as well. Sometimes that's very hard if you're running a mortgage business or running a mortgage company. That can be sometimes challenging. Although I do try that you get a $200 gift card. We'll see, Ishmael. That's a good question. I like that. I like the way you think. That's good, Ishmael. I like the way that you're thinking, man. So, but anyway, I think everybody can hear me and see me okay. So, again, thank you all for watching the show and the channel. Like I said, we have a lot of stuff we want to talk about tonight. A lot of new loan programs that we're going to be coming out that I want to hit on this evening, and obviously your questions too. If anybody has questions that they want to talk about, or things that they want to bring up. I'm going to be talking about some of the new programs that we're going to be coming out with for 2022 that I want to talk about is construction loans, doctor loans, land loans, and a huge announcement. I don't know if you guys saw that the conventional loan limit is being increased to $625,000 nationwide. So it went all the way from $548,250 all the way up to $625,000 very fast, right? And that's going to go into effect. So there's a lot of big stuff that's happening for next year, okay? And that means good stuff, good things. I mean, you're going to see a lot of zero down, 100% financing programs. People that are wanting to build their house and get a construction loan, right? You're going to see doctor loans. You get 100% financing for a physician loan. So, we have manufactured mobile home loans that are coming out. So a lot of different loan products to be able to help you guys out there and the type of funding that you're needing, because not every lender is willing to offer every program that's out there to help you to get the funding. And we think of ourselves as your lending source, your funding hub. So Marie, you're looking to take on as a loan officer. We'd love to work with you and help you. We lend in Florida, we lend nationwide, so we're looking for great loan officers that want to work with us. We've trained over 250 loan officers to grow and expand, and some of them have their own branches, their own team, and they're very, very successful, making a ton of money, helping a lot of great people accomplishing their dreams and their goals. So, yeah, see, and a lot of companies, they're not going to train you. They're not going to spend the time to teach you and educate you and train you, because the business is very, there's a lot, it's just like, I'm not trying to say it's like becoming a doctor, but it's very difficult to become a master in this business and make it. It's very difficult. The failure rate is so high for lending, it's insane. And if you don't have someone there to teach you and show you the ropes, you can crash and burn. So we have a real estate university. It's an online platform that we like to have everyone get started with as a buffer, as a trainer to get you going. But yes, absolutely, we'd love to work with you. If you're dedicated, you're passionate. Passion's a huge thing in lending. You got to be passionate about helping people to solve their problems, get the funding, accomplishing the goal. And that's the thing. A lot of new loan officers, when they get in the business, they do crash, they do burn, because they don't have a guide, a mentor there to show them the way to be successful, because it is a very difficult business. It's not easy to do. So, and I appreciate you for always tuning in, watching the show, because that means that you do care, you are trying to learn, you are trying to get better, and that's a very, very important thing. Once you make it, and you make it to the top, you can, it's really, the sky's the limit on what you can do and how far you can go. So just keep going, don't give up, and know that by watching these shows, watching the channel, learning, if you care and you want to be in the real estate business, you're doing the right thing. You're investing your time to get better, to get smarter. Because, the more you learn, the more that you earn, provided that you utilize that information. So that's a huge thing. Right. So anyway, I'm glad I encourage you to keep going. Don't give up, even if you're getting discouraged. Hey Lisa, your income's 150K, middle score 785. Can I get approval for? Yes, absolutely, all day long, Lisa. Call me. I'd love to help you. Call me at 832-431-633, and we could hook you up all day long to get a loan for that. That's a no-brainer. That's easy peasy for us. So absolutely. So we can get you a great interest rate, a wonderful loan program. We'd love to help you and get you finance. So anyway, so that's the big news. The breaking news for right now is conventional is going to $625,000 loan amount. That means that the purchase price, if you're putting 5% down, is probably going to be around $655,000, $660,000, because the loan amount is $625,000 maximum. So that's going to increase. It's already gone into effect. So later this year, you're going to see lenders adopting that. And next year, that's going to be the new loan limit, everybody. So you don't have to do $548,000 loan amount now. You can do $625,000 loan amount. And then remember, with us, we have a jumbo program that you can add a line of credit on top of that for $250,000. So you could be almost north of, close to $1 million and buy a home with only 5% down. So it's a wonderful program, a great opportunity for you guys out there that are trying to purchase your home. Okay, I highly encourage you guys to really consider looking at getting a loan within the next 12 months, because you have interest rates that are very low. You have construction loans that are coming out. You have, if you want to do manufactured homes, that's another solution that we're going to be talking about tonight. If you're trying to buy a manufactured home, we have FHA and VA manufactured home loans that are going to be coming out next year. That's a great program if you're, depending on where you are in the country. In some parts of the country, manufactured and that's really the manufactured modular homes are the only types of homes that are available, because they're more affordable, and a lot of lenders don't like to make loans on those type of properties. We are going to start doing those, and also renovation loans. If you're trying to buy a property that needs renovation, we're going to have the Fannie Mae Home Style program that will allow you to purchase a property and get cash back for rehab. So let's say that you find a house for $400,000 and it needs $20,000 for rehab. You want to put a new kitchen. You can impound or include that kitchen for the rehab with the purchase of your property. So you can go buy your house and you can get the kitchen that you want, and you can include that all in one loan. So it's a really, really cool program, and we're a big advocate of it. We think it's a great opportunity for you guys out there that are looking to get financing for a home that needs rehab. Some homes are older and they need rehab. So it's a great program for you guys out there that are trying to get funding for different types of properties. The construction loan is the one that I'm probably, the most excited about, because I used to be a home builder, and I know that inventory is very low right now in the United States. And with the construction loan, you can actually purchase your lot, your land, and get the construction loan all rolled into one loan. So let's say I was talking to a client today. He wants to buy the land for $250,000, and he wants to do a construction loan for $800,000. So his total cost is going to be a little over $1 million, and we're going to wrap that all into one loan for him. He wants to pick out his lot, he wants to pick out his floor plan, he wants to pick out his builder, and he wants to be involved in that process. Hey Dennis, good evening. I hope you're doing good. Thank you so much for checking us out. So this is a great time for you guys to start thinking, if you want to build your own home, we have construction financing that's going to be coming out for you to be able to help you guys out there, because you may not, in your area, you might not like the homes that are for sale. You might want to go look at a different property. You might want to build your own property. The builders, they may not be, accepting new clients right now. They may not have enough inventory. So with this construction loan, it's really cool because you can go pick out your lot, you can pick out your floor plan, pick out your builder, and then you can get the construction loan to build your house. So it could be a dream come true for you. So think about that, because it is a great program that we're going to be offering, and it's for you guys out there that are trying to build your home. Another exciting thing that I will say, hey, Elaine, good evening. Thank you so much for watching the show and the channel. I really appreciate you guys for tuning in. Another really thing that I'm really excited about is for veterans. If you are a military veteran and you're a military veteran, a disabled veteran with disabilities, we have an opportunity for you that you can actually literally waive your property taxes when you're purchasing your home. So it's a very strong thing. I was working with a Texas veteran today. He was 100% disabled, and he was able to purchase his home, a $500,000 house. The taxes were normally $1,200 a month. He didn't have to pay any taxes on his home, because in Texas, disabled veterans do not have to pay property taxes. So if you guys know of any veterans that are disabled and their lenders tell them they have to qualify with the taxes, it's not true. You don't have to qualify with the property taxes in your debt to income ratio or make the property tax payment if you're a disabled veteran. Okay, so just keep that in mind, because it's great, because think about it. My client was able to purchase the home and he doesn't have to pay property taxes. He bought a $500,000 house and he's a disabled veteran. He doesn't have to pay property taxes. So it's an awesome thing, because the taxes for a $500,000 home in Texas are like $14,000 a year, right? So he doesn't have to pay them. So if you're out there and you got clients or you are a veteran that's trying to get a loan and you're a disabled veteran, you may not have to pay the taxes that were in the state that you're in. And with us, we won't make you pay the taxes. So there's a lot of cool stuff out there, guys. A lot of great loan programs, a lot of opportunities. So is there such a thing where investors buy a home, like I make payments to them and eventually own it? Yeah, you can do that. There's companies out there that's called like Ribbon Homes, where the investor buys the home from you and then you can purchase it back from them. I don't recommend doing that though. They charge fees. And I'm not a big fan for you to do that whenever a lender like us can just give you a loan to purchase the house. I don't recommend doing that. And my advice is not to do that, because what happens is they're going to purchase the house and then turn back and lease it back to you. And then they're going to charge you fees, usually 1%, 2%, 5% fees to purchase the house back from them. And I really don't see the need on why you have to do that if you have a lender like us that will approve you for the loan. I don't think it's necessary, unless you don't qualify right now and you need them to buy the house and then you purchase them from later. I would say if it's a last resort, you can do it, but try to avoid it if you can. Okay, because you can buy your own house. There's a lot of programs, like we're going to be coming out with a program next year, 100% financing. So you don't need a down payment. So if you have 100% financing, you don't need a down payment, then what difference does it make, right? So just think about that, because it's very compelling to be a homeowner, to own your own property, and you don't need to lease. You don't need to have an investor buy a house from you, okay? So I hope that helps make some sense. And if you guys ever have any questions, please feel free to message me down in the chat box. I'll try to answer every question the best that I can, as fast as I can, to get you guys the right information. Okay. But there's some big changes that are happening right now in the market. So the biggest thing that, like we talked about earlier, is the conventional financing. The loan limit is increasing. That's a huge thing, because you can get conventional financing up to a $625,000 loan amount. No, USDA. So we're going to have, what's a good starter position with your field of work? Okay, good questions. For zero down, it's USDA, VA. We're also going to be coming out with a conventional zero down next year. So it'll be conventional, USDA, and VA zero down, 100% financing. Conventional zero down starting next year. Okay. So Ishmael, great question. A good spot to get started would be either loan processing or loan officer assistant. I talked to a mortgage broker. He mentioned to me that the most homes bought now will be eventually underwater. I don't necessarily agree with that. I think that home prices could continue to rise. I mean, you don't know. I mean, I'll give you an example. I mean, it's just in my area where I live, someone approached me and offered me 30% over what I paid for my house. So now, is that going to last forever? Probably not. Okay. I've said this before. I don't think that we're crashing. I don't think that the market can keep doing what it's doing. But I think that there could be somewhat of a small pullback, but I don't think that you're going to see a depression or recession or huge decline in prices. You might see a little bit of a pullback or a slowdown, but you're not going to see like an implosion like 2008. I don't see that happening. I mean, you have the strongest economy in the world. You have people that are very intelligent. They want to work for the most part, or they have aspirations of owning a home or doing something. The cap will be $625,000, 100% financing. That's right. That's going to be out next year, Lisa. No money down, 100% financing. So and you don't have to be a first-time buyer. So we're going to be rolling that out next year for you guys. We got a lot of cool stuff. 100% financing, conventional, very strong program. Yeah, it's going to be amazing. It's going to be really amazing. You won't need any down payment. So now there are closing costs, so you can potentially get closing cost concessions, or you might have to pay your closing costs. But yeah, you won't have to put a down payment for conventional. So really, really strong program. I'd love to talk to you about that. If you want to get started now to get the process started, you can apply with us to get the process started. Call or text us at the number above, the 832-431-6331. We can start working on getting the loan ready for you to get you pre-approved and get you your pre-approval letter. So what else did I want to talk about? Manufactured homes, mobile homes. We're going to be doing those. So rehab loans, if you're trying to buy a property that needs rehab. The minimum purchase price for any of these are $200,000 or higher. So the price of the home has to be at least $200,000 or greater. But yeah, if you're looking to buy a manufactured double, it has to be a double wide, can't be a single wide. And we'll offer that program with FHA. You only need 3.5% down. VA, you can get a double wide with 100% financing. Yeah, conventional is going to be zero down, 100% financing. Awesome program for you, because then it'll save you. Like on a $400,000 home, you normally have to put 3% down. That'd be $12,000 down. So you could get it with zero down. You could save that 12 grand. You could use the 12. Hey, Elaine, I just bought a house 3 months ago with FHA. You could build another house, Elaine, but you probably wouldn't be 3.5% down. It'd probably be 5% down if you still keep that house. Now, if you sell that house, then you might be able to do FHA again. But if you keep that house, you're probably going to have to do a conventional construction loan, and that's going to be with 5% down. Okay, conventional construction loan with 5% down, because you already have an FHA loan. Okay, so it can be done, but you're probably going to have to do conventional construction with 5% down. So you can pick out your lot, pick out your floor plan, pick out your builder, build your home. And we can do that up to a $3 million loan amount. So very, very awesome program, strong program for you guys out there. Another program that I was talking about before is a physician loan if you're a doctor. How many of you guys know of a doctor in your family or your friends? We have a 0 down, 100% doctor loan up to $1 million that we're going to be rolling out next year. So that's going to be a very strong program for you guys. 0 down, 100%. If you're a physician, right, or you're in residency about to become a physician, you can get a 0 down, 100% financing doctor loan with no PMI up to $1 million purchase price. Awesome program, phenomenal. With no money down, 100% financing. It literally is a no-brainer, guys. And we want to be here to be your market leader, your lender, to help you to get you that loan. We're going to have all these different programs to help you guys to offer you the most attractive, best financing. We want to be your lending source for all your financing needs. You know, and we still do conventional loans, FHA. I live and have personal loan on the home, but have been thinking of getting a new house outside of mobile home park. Yes, you could do that. You could do USDA or FHA or conventional or VA. Well, if you're a veteran, then you could do a VA loan, but you could do FHA, you could do USDA. You got a lot of different options that you can do. Okay, now the one thing with mobile home loans, they have to become real property. They can't stay as personal property. They have to become real property, which is not a big deal. It just means that the land and the home have to be included. So it can't be separated and be a personal loan, probably like what you have right now. It has to be a real property loan. So, but yeah, we have no problem to make a mobile home loan. Our minimum loan amount is $200,000 on our mobile home loans, but we'd be happy to help you with it. These are a lot of the really strong programs, and we still offer our first lien HELOC. Remember, our first lien HELOC program is you can get a line of credit and purchase your home or refinance. That's a wonderful loan program, an awesome loan program for you guys out there. You can get a line of credit, and you don't even need a mortgage. And I have a ton of videos on our channel talking about a line of credit loan. You can get rid of your mortgage and actually turn your mortgage or your house into a line of credit. That's a very, very strong program. So there's a lot of different options for you guys out there, depending on what you're trying to do. Okay, we have all different types of loan programs to help you guys. Remember, we lend nationwide, so we lend in all 50 states. So whether it's Hawaii, Alaska, Texas, Florida, California, New York, we have all different types of loan programs to help you. So please don't be a stranger. Reach out to us if we can help you with your loan programs. We want to be able to help you and service you and cater to you to take care of all your loan needs. That's why we're here for you. So, and I've been doing this for 20 years. You can look me up. You can research us. We've helped hundreds of thousands of people. We have excellent reviews. We try to offer, we're open 7 days a week. Can you expand a little on that HELOC with a refi? Yeah. So absolutely. And so basically, you guys know what a credit card is. It's a revolving line of credit. If you have a credit card, like with American Express or Visa or MasterCard. Well, about 20 years ago, in our financial, Wall Street and a lot of people are very, very smart in America. They came out with a loan program called a HELOC, or a line of credit, to where you could use your home like a credit card, right? Because real estate properties, they appreciate in value, they go up. You can buy out of state where you're employed, yes. And I've done videos on that, Elaine. Hey, Pink Lady, good to see you. Glad you're back. So anyway, the way that it works is, instead of being like a credit card that's unsecured with a high interest rate, it's a low interest rate, like let's just say 4%. And instead of having the mortgage, you have a line of credit. Let's say the home is worth $400,000, and let's just say that the home is free and clear. You have no mortgage, so you have a $400,000 credit line. So let's say 1 month you want to pull $50,000 out, and you want to do home improvements. Well, you're just paying $50,000 on that money that you've drawn. You have $400,000 of available credit, and then so you're just paying $150 a month on that 50 grand. Then let's say a month later you want to take another 20,000 out for a vacation. Well, now you have 50 plus the 20, so you have 70,000, and now your payment went from 150 to 180 a month. Well, let's say that 2 months later you pay off that 70,000, and then now you're back at zero, so you have no payments. And then 6 months later you want to pull out 100 grand to go buy a rental property. So you can keep doing this back and forth. Pull money from the line, pay it off. You can do that for 20 years. Yes, you can do it with any scenario numbers up to 90% of the value of the property. So the HELOC will work up to 90% of the value of the property, up to a $750,000 loan. If it's over $750,000 loan, it goes to 80%, up to 1.5 million. So you absolutely can. And it's a wonderful program for you guys. Phenomenal program. It's literally you're turning your home into a line of credit as opposed to just a mortgage and not doing anything for you. Okay? So it's a great product. I highly recommend it. You can be very successful with it. You just have to have a plan and know what you're going to be doing with it, okay? And if you know what you're doing, then it can make a lot of sense. What you don't want to do is just drain all the money out and then you don't really have any plan. A lot of people use it for investing. A lot of people use the first lien HELOC to invest. They want to buy rental properties. They want to buy assets. They want to invest in crypto, whatever. I had a client, he did one last week. He took $750,000 cash out to invest in crypto. People do this stuff, guys. So it just depends on what you're trying to do, okay? There's loan programs literally for everybody, based on what your strategic goals are. We talked about, if you're a disabled veteran, you can, waive the property tax. If you're trying to build a house, you can do a construction loan. If you want a mobile home loan, you can get a mobile home loan. If you want, a jumbo loan, we give you a jumbo loan. If you want, if you're a physician, you can get a doctor loan. There's all these different type of loan programs out there. It's not just conventional plain Jane 20% down at the bank. There's a lot, they're self-employed. We're one of the market leaders with self-employed loans. We have no-doc loans. We have 1099 loans. We have bank statement loans. We have one-year tax return loans for self-employed. Because self-employed is what drives, the small business owner, the entrepreneur is what helps drive America. I'm a small business owner. A lot of people watching the show are small business owners and they get turned down for loans. That's not fair. There's a lot of hardworking individuals that watch this show that are out there in America working their butt off to get things done. No, the HELOC has to be a fully documented loan. That's a great question, Lisa. The HELOC has to be a fully documented loan with W-2s or taxes for the last 2 years. They don't offer, someone else asked me that question a few days ago. They don't offer a HELOC on no-doc yet. It may come out in the future. It just doesn't happen yet. So these things are, there's market makers, product developers, and they try to roll out all these exciting new programs that could come out in the future. It very well could. And if it does, we want to be able to offer that to you, okay? Because it'd be great if it came out. We'd love to make that loan to you. It's not out yet. So, but it's a great question. I hope one day that it does come out and that we're able to offer that program to you, because we want to be able to give that to you because we know how special that is. And and some of you guys might be new watching the channel. I've been doing this for almost 20 years, lending, okay? Lent almost, $3 billion in loans. Our show, we do 4 shows every single week. Am I holding up 4 fingers? Okay. Monday, Wednesday, Friday, and Saturday. They're way low in my name. That's a good question. I'm going to answer that question for you. I saw your question on the liability. But we do our show Monday, Wednesday, Friday, Saturday, new shows every week, brand new shows. So Jessica, hey, I'm interested in purchasing a home out of state from where I live. Yes, you can purchase a home out of the state. Let me answer the first question. So, sir, you said that you're trying to buy a house and they're trying to pull credit and liabilities on your wife. Well, if you're buying in a community property state and doing a government loan, then the lender has the right to pull your wife's credit even if she's not going on a loan. Now, if you do a conventional loan, then you don't have to disclose your wife's debts or her credit. But if you're in a community property state like Texas, oh, you're in Charlotte, then they shouldn't be doing that then. If she's not going on the loan, they shouldn't be pulling her credit. That's not right. North Carolina is not a community property state. And if your wife's not going on a loan, they shouldn't be pulling her credit. You need to tell them to stop doing that. Because is she going on the loan or no? If she's not going on the loan, then they shouldn't be messing with her credit. They don't pull credit, but they still ask. No, they shouldn't be asking for her W-2s if she's not going on the loan. You know, I don't know what type of lender you're working with or what type of loan that you're doing. But if she's not going on the loan, I don't know why they're asking for her W-2s. I would really. Oh, no, definitely not for conventional. No way. Why? Why do they want her W-2s? Community property state, Lisa, is, and you can look this up. I did a video on yeah, they shouldn't be asking for that, Raymond. They shouldn't. You need to tell them they don't need that. Unless you want to give it to them. Community property state, and I've done videos on community property states. I'll answer that here in a second. Should you set up more like a business using EIN? Okay, I'm going to answer that too, Lisa. Somebody else asked me a question about buying a house out of state. So yes, you can buy a house out of state. It's not a problem. You just either have to document a few things, and I've shot videos on this. You can either show that you're transferring to that state, or if you're self-employed, you're moving your business to that state, or if you work remote, get a letter from your human resource department saying it's okay for you to work remote, or if you get a new job, get an offer letter from the new job. Any of those four things will work if you're buying a house out of state, okay? So if you're, now, Pink Lady, your question is, should you open up an EIN? I think you should, in my opinion. You should separate everything out from your social and put it on your EIN in your business. Open up a business account, develop business credit with your EIN, and deposit all the money in your business bank account. That's my advice. Okay, because if you want to try to at least go somewhat big time and take your business to the next level, you're going to have to do that anyway. You know, and it would help to clean things up when you're trying to get a loan too. You can get a loan with your sole prop and do it under your social. It's not a problem. Not saying it can't be done. It's just that, you know, it looks better for loans and banks and stuff. If you try to get your own business, your own EIN, your own entity, it just looks better for the loan. Okay? And what I recommend that you do. But even if you don't have that, it doesn't mean you can't get a loan. It doesn't mean you can't get a loan if it's all under your social and you're a sole proprietor. That's okay. Okay. So now going back to your question, Lisa, on a community property state, and I have videos on this on our channel. There's 11 or 13 states. I got to go back. I think it's 11 states in the United States of America that are community property states. And what that means is, and it goes, you know, obviously if you're married, you know, 50-50, mine is mine, hers is hers, it's half. And essentially, the way this works with real estate specifically is if you're in a community property state, like Texas is a community property state, California is a community property state, Wisconsin is a community property state. So when you're doing an FHA or a government loan, and I'm married, the laws, those products and those laws require, even if my wife isn't going on the loan, I have to add her debts into my debt ratio. Okay? So I know that's a mouthful, but again, I'm married and I want to do an FHA loan in Texas, but I don't want to put my wife on the loan. She has bad credit. So the lender is going to say, you know what? It doesn't matter. In Texas, this community property state, the law says I got to put your wife's debt onto your debt ratio. Okay? So the thing is that your wife's debts have to be added to your debt ratio, even if she's not going on loan. And you may say, well, Angelo, that's not fair. That's not right. And I'm going to say, I agree with you. And I didn't make those laws. And I don't make those laws. But we have to follow the law. And that law says that. If you're married and you're doing a government... Now, if you're doing conventional, it doesn't matter. So, how much of is it? So I hope that answers your question, Lisa, on community property. On the survey, Raymond, yeah, I mean, you can ask if you can use the seller survey, if the title company will accept that. And if they'll accept that, you should be able to use, the seller survey if it's not over 10 years old. If the seller doesn't have one, then you're probably going to have to order a new survey from the title company. The title company can normally order the survey. So I hope that answers your question. On conventional loan limits, just find out if the seller has a recent survey. If the seller has a recent survey that's 10 years or less, you could use that. If not, then no. That looks about right. Yeah, I don't know. No, I don't think all those states are community property. Tennessee's not community property, and neither is South Dakota. So a lot of those were Ishmael, but I don't think all of those are community property. So somebody was asking a question about the conventional loan limits, about something changing or increasing. I want to make sure that we answer that question. What was that question that somebody was asking down there about conventional loan limits or something changing with rent? I wasn't following your question about what you were asking. If you could clarify your question. Just clarify your question. What was your question about that? Because about rent payments with conventional, I think somebody was asking a question about that. So if you want to post that question again, I can answer that question for you. It kind of went, is the increase to 600K? No, the increase is the 625,000. It was 548,250 before. So it's a huge increase, and I'm very happy that they did that. It's great. I'm very excited. I think FHA is going to have to follow that too. How does counting rent payments help you yes, great question. Rent payments. So yes, Fannie Mae does allow to include rental payments, which is one thing I like about Fannie Mae compared to FHA. FHA, if you have rent, has to be on your tax returns in order to use that rent. In other words, if you own a rental property or you're going to be departing and you're going to be collecting rent, like I was helping a customer today, he owns a $400,000 house. He's going to buy an $800,000 house. He's going to keep the $400,000 house. He's going to lease it out for $3,000 a month. Now, with FHA, he cannot use that income, the rental income of $3,000 a month, because he doesn't have it on his tax returns. But conventional Fannie Mae will accept 75% of the rental income that you're getting. So in this example, if he's leasing it out for $3,000 a month, they'll let him use 75% of that towards his rental income to qualify to help offset his debt ratio against his mortgage. So that's a really, really good thing. That's one of the great things I love about conventional Fannie Mae loans, is that you can use the rental income to offset the mortgage up to 75%. So I hope that helps answer your question about Fannie Mae and how you can use rental income. Okay, because if you're in a situation you're trying to get FHA, rural property, probably 3.5% down if it's a duplex. USDA really doesn't like to do duplexes. It would probably be not USDA, so 3.5% down, conventional FHA. Yeah, but they still shouldn't need her W-2, Raymond. They should just get your W-2. Your lender's saying 15 is required in California for a duplex. What's required, Casey, for 15% down for a duplex? Yeah, if you're buying a duplex, It depends. Okay, hold on. So I just want to make sure I understand. You're trying to buy a duplex and go conventional. You could do that with FHA with 3.5% down. But a duplex, if you're trying to do conventional, yeah, it's going to be 15% down on a conventional. A single family could get away with 3% down or 5% down with conventional. But FHA, jumbo loan, the 2 houses on 1 property. Yeah, I'm going to say 2 houses on 1 property. I'd have to see the property. I'm not sure if we could do that with 5% down. I'd have to look at the property and see how it's zoned, how the appraisal district has it. You're looking at, I mean, best case scenario, 5% down. Worst case scenario, well, if you go FHA, it could be 3.5% down. If you're, depending on the county loan limit that you're in. So best case scenario, 3.5% down, or 5% down. Worst case scenario, 15% down. Yeah, I mean, call me. I can tell you. I can look at it and tell you. I mean, here's the thing. If I can't figure it out, no one else is going to be able to figure it out. I promise you that. Okay? I've been doing this long enough to where I feel confident enough to tell you if I can't figure it out, then no one else is going to be able to figure it out. And that's not me being arrogant. You know, I really been a student of mortgage, you know, my whole career to study the markets to give you guys the best programs that are out there. All right, so there are some potential options for 3.5 down, maybe 5% down. I got to look at the property. Take another hit. Well, talking to you and looking at your file is not going to give you a hit. And I know that's a big concern that people have, is that it's going to hit their credit or whatever. But if I just look at your, we have a conversation, I take a look at your file, I don't have to pull your credit, and I can tell you potentially what we can do. I don't need to pull your credit to do that for you. You know, if we get serious and we go into a deal, then I can pull your credit, okay? So, but just to have a conversation with you and kind of look at everything, you know, I don't need to pull your credit. We can do that stuff later. So call me. You have my number, 832-431-6331. I'd like to see what we can do. It's not a bad idea to get a second opinion, especially for a major decision like this. You know, I think it's important, you know, you go get a second opinion for your doctor, to the hospital that you go to the, you know, the dentist that you see when you're dating, usually date a few people. Why not get a second opinion from a lender? You know, I mean, it's not a bad idea because not every lender is created equal. Different lenders have different programs, different knowledge bases. So, you know, you just got to make sure. Oh, and if it's your grandmother's property, you might be able to get 0 down because of gift of equity. When you're buying your family's property, you can do no money down, 100% financing. So you might not even have to put any money down because you're buying your family's property. Did you know that? So there's so many ways that things can get done. Yeah, if you're buying your family's property, you don't have to put a down payment. You know, so yeah, no, you don't have to put 15% down when you're buying your family's property. So there's a lot of ways around stuff, and it's all based on, you know, the lender's knowledge. What if they don't have survey? Can we do that after? No, you have to. You're probably going to have to get another survey. If they don't have one, you're going to have to probably order a survey. You can ask the title company to order and bill you at closing. They're usually about $300. Most likely the title company is going to want a survey though. You can ask them if they'll ask the title company, Raymond, and the lender if they do something called the T19 endorsement. If they do a T19 endorsement, they may close the loan without a survey, and then you don't need one. But the lender and the title company have to agree to do the T19 endorsement. If they agree to the T19 endorsement, then you don't need that. USDA requirements are 620 or higher credit score, debt to income ratio ideally below 41%, no bankruptcy or foreclosure in the last 3 years, fully documented loan, no accounts in dispute, no collections, and income has to be in a rural area, cannot be in an urban area, it has to be in a rural area. We have a ton of videos on USDA. And then there's income restrictions. The income usually, has to be below 90, 100,000 a year. It's subject to the county that you're in, but it's based on the county that you're in. So usually your income has to be below that for a family of 4 or less. If you have 5 or more, the income can go up to 130, 140,000 a year. But you have to make below that income, and those are the main requirements for USDA. We specialize in USDA. We've been doing USDA for a really, really long time. One of the first programs that built my career was USDA 0 down 100% financing. So a lot of programs. I'm very excited to be able to offer all this to you guys. I really appreciate all you guys, all the great questions, giving us all your support. That's why we're here, to educate you, to empower you, to take your life to the next level, so you can have that knowledge. If you don't watch our show or our channel, you're not going to be aware of all these different loan programs. So we're here for you to make a difference. Call or text us at the number above, the 832-431-6333. We really care about you. Love you guys. So I'm going to do my $100 Amazon giveaway as promised. Every Thursday, 7 p.m. we do our test, our little brain teaser, and we offer our $100 free Amazon giveaway for you guys out there. Yes, you can call us about the construction loans. Now, the construction loans are starting with 5% down. We do offer them. So call or text us at 832-431-6331. We can offer you a construction loan. Yes, we do no-doc loans for sole proprietor. That's okay. Can you get a loan for a self-directed IRA? Possibly. It's a non-recourse loan, and it'll probably be a private loan. No, USDA for the existing home is no money down. Construction loan is 5% down. Existing home USDA is no money down. Construction loan is 5% down. Self-directed Roth IRA, if you're trying to do that, to do a non-recourse loan to pull the funds, yes, it's possible, but it's a high interest rate private loan. If that's what you're asking me, a non-recourse loan, it can be done, but it's not going to be a bank rate loan. And I don't know if that's the question that you're asking. I'm not sure what you're asking, but I mean, you can call me. We can talk more about it. I've done loans like that before, non-recourse loans, and they want them done through their IRA. It's usually a private loan. So anyway, remember, every Thursday, 7 p.m. Central, we do the free $100 Amazon gift card to our lucky winner. You call or text us. You send us your email. Whoever answers the question first correctly and accurately, they'll get the $100, okay? So for the $100 Amazon gift card, the question is, what is the new conventional loan limit with Angelo Christian? What is the new conventional loan limit that we can do with Angelo Christian right now? So whoever answers that first is going to win the $100 Amazon gift card. So please type that in and answer. No, not almost close. You're close, Casey. So come on. Who's going to get it? Let's go. Let's go. Let's go. You got it, Ishmael. Ishmael got the $100 gift card. All right. Good job, Ishmael. I'm proud of you. I'm so proud of you, Ishmael. Text us your email address. It's 625,000. Ishmael, you got it. You're the lucky winner, Ishmael. Text us your email, and we'll get that gift card out to you. So please text us your email, Ishmael. We'll get that free $100 Amazon gift card out to you. Guys, thank you so much for watching Angelo Christian. We love you. Take care. Peace out. All the best in October. And we'll see you guys next Thursday, 7 p.m. Central. Take care and peace out. Bye-bye.